Dear students, in this particular video, we would be covering the first chapter of Management and Cost Accounting. And here we would be getting an introduction to the concept of cost and management accounting. In this particular video, I would be talking exclusively about management accounting. As we know, there are three branches of accounting: financial accounting, cost accounting, management accounting. Financial accounting is the branch of accounting that deals with preparation of books of accounts and final accounts. Basically, financial accounting deals with the statutory requirements of any registered company in terms of its financial filings. Cost accounting is a branch of accounting that deals with study of cost and methods to reduce cost. Management accounting helps in providing key accounting information to the management so that they can go about taking strategic decisions. Now, in this particular video, we would be deep diving into details of what management accounting is all about. So, what we have just got to understand is that management accounting is the branch of accounting that provides the information that is needed by the management. We know that any management for any business to be successful, it is mandatory for them to take strategic business decisions. So, which means they would be needing a lot of information, especially financial as well as accounting information. So, management accounting is that branch that has been empowered with this responsibility in providing this particular key information. So, management accounting helps to ensure the management is able to fulfill its responsibilities of planning, organizing, directing, and controlling. The definition of management accounting that has been given by Robert and Anthony is that management accounting is concerned with accounting information that is useful to the management. Brown and Howard said that the essentials of management accounting should be to assist the management to take decisions. The Chartered Institute of Management Accountants in UK, they have defined management accounting as an integral part of management concerned with identifying, presenting, and interpreting information that is used for formulating strategy, planning and controlling activities, decision taking, optimizing the use of resources, disclosure to shareholders to safeguard assets. Now, let's talk about the functions of management accounting. The first function of management accounting is that it helps in planning and forecasting. For a business to function effectively, they need to know how the future would unfold for them. So for this, a business would be forecasting how the revenues would be, how the sales would be, how likely the expenses are, like what are the different changes with respect to the cost. So based on the forecast inputs that the management would be receiving, they would be making plans for the future accordingly. The second function of management accounting is that they help with financial analysis and interpretation. Most of the time, we would observe that the accounting domain and finance domain would be leading with a lot of statutory information, which may not be easy for a common man to understand. A management accountant would come into the picture, would be able to process this particular information and draw meaningful conclusion, or in other words, a management accountant would be able to break down the complex accounting information that is available into plain, simple language. The next function of management accounting is that they would help in terms with the managerial control. So we know that there are different departments which are functioning in an organization, as and when, depending on the increase in the size, changes in the volume of sales, we would understand that the organization structure would become more and more complex in nature. So to ensure that we are able to effectively manage, the management has to be constantly ensure that there is control mechanisms which are implemented. So management accounting would help us to evaluate and see how effective these control mechanisms are. From time to time, different departments of the organization are needed to work in synchrony to ensure that the business is functioning smoothly. So for this, we would be needing coordination among the different departments. So this is the place where management accounting would come into picture. They would ensure that there is a smooth coordination which is happening between the different departments. It could be operations, it could be marketing, it could be HR, it could be finance. So management accountant to help us to ensure that there is interactions which are happening smoothly among the different departments of the organization. From time to time, we would have to communicate with the different business stakeholders. When we talk about stakeholders in a business, we have a diverse group of stakeholders. It could be employees, it could be management, it could be government, it could be the community, it could be customers, it could be suppliers, it could be creditors. So all these are the stakeholders when it comes to a business. So from time to time, depending on the need, depending on the context, the business needs to interact with these different stakeholders to ensure that the information is made understood these stakeholders. Management accountant helps in simplifying this information. Finally, management accountant helps in ensuring that key strategic decisions are taken that will help in the business to progress smoothly and effectively. Now, let's talk about the relationship between the three branches of accounting. We know there are three branches of accounting: financial accounting, cost accounting, and management accounting. So, as soon as a transaction takes place, financial accounting would come into picture, which would take care of the statutory requirements. They would ensure that the sufficient documentations are taken place. Based on the documentations that are available, the bookkeeping is carried out. Based on the bookkeeping records that are prepared, final accounts are prepared. Once the statutory final accounts and other documents are prepared, this information gets supplied to the cost accountant as well as to the management accountant. Now, cost accountant, from the information that is provided to them, they would be interested only in the cost details. So they would try and segregate and identify which are the details specific in terms of cost. So the cost accountant would be processing this information to carry out a lot of cost related analysis. Later, this information would be supplied to the management accountant. Now, management accountant picks up inputs both from financial accountant as well as cost accountant, process this information, identify what information is vital, and take key strategic decisions. Once these decisions are taken, the decisions are implemented. Once the decisions get implemented, it gets translated or transactions. So once transactions takes place, again, the process of financial accountant, cost accountant, management accountant would come into picture. So this is the relationship between the three branches of accounting, and this flow chart helps us to understand the directions with which the information would be flowing within an organization. Now let's talk about the process of management accounting. Now, the management accounting deals with three steps. Those steps are collecting the data. So where do we get the data from? The data is got from cost accounting as well as financial accounting. Second step is analyzing this data, and then third step is communicating. So as we had stated earlier, the management accounting gets the information from the financial accountant or from the cost accountant. Depending on what is the requirement, the management accountant would go about applying a suitable tool. It could be cash flow analysis, it could be fund flow analysis, it could be ratio analysis. Whatever be the requirement of the management, the suitable tool will be applied. Once the output of these tools are received, the management accountant would be preparing suitable forms of communication in a manner that it could be understood by the receiver. So, in other words, complex accounting and financial information gets broken down into plain, simple English, and this later gets communicated to the stakeholders. Let's talk about the limitations of management accounting. The first limitation is that the entire domain of management accounting is based on historical accounting information. We are relying on the inputs of the past to take decisions for the future. So sometimes what can happen is the future events can be uncertain as well. Whatever we have understood for the history may or may not hold good for the future. Next thing is that the interpretation of the accounting information is usually individual centric. It depends on a person's qualification, it depends on a person's experience. So, which means the interpretations could vary from individual to individual, and sometimes this can have cascading as well as contrasting effects that may not be desired. Finally, for us to go about carrying a management accounting activities in a business, we need a qualified management professional. Sometimes the management accounting professional may not come at a nominal fee. We may have to pay hefty salaries, hefty remuneration to ensure that these activities are implemented in the organization. Next, management accounting is relatively a very new subject. Most of the concepts here are evolving, and which means there are a lot of changes which are coming about in terms of its practices and formats. Finally, whenever we think of implementing management accounting in a firm, it could bring about a lot of psychological resistance among the employees. This may not be desired very often. However, stiff implementation of management accounting practices in an organization can often be met with a lot of resistance from the employees within the organization. Now, let's talk about the differences between the three branches of accounting. Financial accounting deals with bookkeeping and preparing final accounts. Management accounting helps in decision making. Cost accounting deals with the study of cost and controlling cost. Financial accountant is meant to serve internal as well as external users. Management accounting is meant again for internal and external users. Cost accounting information serves only the internal users in an organization. Financial accounting is mandatory. Any registered entity it's mandated by law for them to carry out financial accounting activities. Management accounting, there are no legal obligations. Cost accounting, some practices of cost accounting is mandated. For example, companies with a turnover of 50 crores and or more, it is mandatory for them to prepare cost sheet. Financial accounting, it's a time-bound activity. Financial accounting can be done only within the financial year. Throughout the entire financial year, we will have to carry out bookkeeping. It's only at the end of the financial year that we can go in for preparing final accounts. Management accounting, it's a quick process. It can be implemented based on need and conveniences. Cost accounting sometimes can be slow and time consuming. Financial accounting deals with quantitative information. Management accounting deals both with qualitative and quantitative. Cost accounting deals with both qualitative and quantitative. Financial accounting is based on some set standards. So we have some rules, regulations, formats which are defined, and we would go about carrying out financial accounting based on these set standards. Management accounting is not based on any set standards. Cost accounting is based on some activities are based on some common guidelines that has been provided. So with that, we've come to the end on the video on management accounting. I hope this video has been fruitful for all of you.